Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Good morning, everybody. Cowboy here, 8:30 a.m. EST, and I believe I got all the technical stuff ironed out. We had a couple technical issues yesterday with the cameras and whatnot, but now it appears that we're okay. So go ahead and leave a quick note either in the comment or the private chat. Let me know that you can hear me. And the gorilla says he is gay. Okay, interesting. That's in the private chat. Morning, V. How are you, sir?
I'm no longer V. I'm the living room known as V.
Yeah, right. Yeah, you're the you had Theo, the what do you call it? The interior decorator come by and
you leave him out of this.
Theo has been spending a lot of time at your house, dude.
How do you know this?
Because he tells me.
Oh, I thought you were hacking into my ring cam again.
No, it's called Pillow Talk, V.
Oh.
So hacking. No, you don't need a hack when you got pillows. All right, good. So we take 2 pillows, we connect them by a string, and we stretch it across the country. And then you talk into one pillow, and that's how it works. Look at that, silver above $61 this morning. Yeah, we got FOMC today. The market's going to probably be a little bit choppy.
They can't lower rates.
Yeah, I mean, you said
you know
that.
Why?
Why?
The yen carry trade is not done unwinding, buddy.
So if they lowered rates, okay, so the yen carry trade, it consists of the Japanese yen. It consists of Japan protecting their currency by hiking rates.
Correct.
So are you
suggesting the last 30 years? For those that don't know,
you finish your donut and then
how dare you? I'm eating an organic chocolate chip cookie after it's my post workout meal with black coffee. So don't like it.
Oh, did you do your hot yoga this morning?
No, spicy Pilates.
Okay. So spicy. That sounds pretty spicy.
You rub hot oil all over yourself, and then you do these Pilates exercises.
Have you been giving Nuru massages?
Yes.
Okay. Well, when you're done with your cookie, let me know. I'll start talking about the charts here.
To executives in Wall Street.
Yeah, right. Yeah. The female executives, I hope.
No, sometimes it's a male. They just want to know what it feels like to be next to a large, hairy
gorilla. This show got really gay, dude. Show got extremely gay.
Hey, you took it there, man.
Oh.
All right, for those that don't know, the Japanese yen carry trade for the last 30 years, the way the game played is this. But, little Cliff Notes version. If you're a U.S. financial firm, you can go to Japan. You could borrow, let's say, 10 billion yen at 0%, or 100 billion yen, okay, at 0%. And then you're able to reinvest that and buy U.S. equities, bonds, stocks, whatever the hell you want, crypto, whatever. And that's the game that was being played because, why would the excuse me, chocolate chip cookie almost took me out.
Jesus Christ, V.
Wow. Sorry, guys. Sorry.
You're gonna have to send you like a CPAP machine or something.
Oh my God!
Force that cookie down.
Hey man,
drink your pumpkin spice latte, bro. Get it down.
Hey man, you listen, man. Don't mock my inner white girl. Okay, I love pumpkin spice, and I love my pumpkin spice lattes. How dare you? So this is the way it worked, and the whole game worked so long as Japan, who's been on this zero interest rate policy forever, they've been exporting their deflation, so they were peachy keen. Now their system is breaking, and they're stuck with a fork in the road. Number A, either continue the yen carry trade and watch the cost of living absolutely eviscerate their population and their people, or B, raise the rates by a measly 25 basis points, which they did in August, and you've seen the chaos emerge that we're still going through, and vaporize the financial markets. Well, they kind of chose their people, right? And there's more to it from what I'm hearing from my Wall Street sources. There are still some captive whales holding some positions that are still left over. And so this thing is, from what I'm hearing, and take this with a grain of salt, the unwinding is still continuing. This is why Powell is not going to raise any or cut any rates here. They're stuck between a rock and a hard place, the Fed. Now,
wait, can you explain
Japan,
why you cannot cut rates while the Japanese yen carry trade is still unwinding?
The reason why you cannot cut rates here while it's still unwinding is because if you cut rates, it can be like right now, there are a lot of these guys are left holding the bag, right? So if you're cutting the rates, you can have a negative feedback loop that affects the negative feedback loop. It will be you're directly impacting the Japanese side and their trade against the dollar, against the bond, against whatnot. So if you leave it status quo, you hope that it works out. This is why the Fed is between a rock and a hard place.
So
if you cut the rates, you're going to cause the Japanese to respond. They can increase their rates as a response to us cutting ours. That's the fear here, right? So if they raise the rates, they go to 50 basis points. That's going to nuke a lot of these investment funds, these CLOs, collateralized loan obligations that are all intertwined within the yen carry trade. I think I wrote about this in 2012.
Yeah. So let me try to translate this for,
Sure.
maybe the people who might see this now or later. But okay, so you have some big players who they've borrowed Japanese yen.
Yeah.
And they've used that to invest in major positions all around the world.
Yeah, the reason why everything here is so fucking expensive and has been climbing, assets have been climbing in value for so long here is one of the big reasons. It's not just ZERP, it's not just NERP, it's not just quantitative easing, it's not just print to oblivion, but it's also this crack line, this heroin line that's been coming out of Japan to here. And the Japanese were great to play along with it because, hey, you know what? Get rid of our deflation, go for it. But yeah, go ahead.
Well, I mean, that not just us. I understand that it's massively done in London.
Yeah, it is massively done in London, correct?
In fact, I understand
how London offset that risk a little bit?
How's
Take
that?
the pressure off? They stuffed it in Frankfurt, in Germany.
Which means that now Germany is in trouble.
Big time.
Yeah,
I remember in 2012 writing that this thing's going to unwind. First Japan, then Germany. If people have been following me for that long, you might remember this. But go ahead, Cowboy.
Well, no, it's so, I mean, to make it really simple though, right? So you could call this contagion, right? If you wanted to use that word. But the Europeans and the British are probably, well, I mean, now you're getting to where I was trying to go to. So we'll go back to that in a minute. But this debt out there is contagious. And if the US were to cut or hike rates or anything like that, then it would mess up the playing field for Japan while the unwind happens, right?
Yep.
And if we do that, and Japan
will have to hurry up and increase their rates again,
right? If Japan hikes their rates, then all the people who are trapped with this debt, which
CLOs.
include major players in Germany,
huge banks, huge infrastructure banks, huge agricultural banks, huge banks are holding this shit.
So if Japan hikes their rates while all these large players hold this debt, particularly in Germany, London, the US, and I'm sure all around the world elsewhere, then all those people who hold that debt are in big trouble, right?
Huge trouble.
Yeah, because I remember the people who got all that cheap debt, and this is one thing that a lot of people don't understand about like the financial markets, right? So everything is debt. And in the run up to COVID, and then for 10 years, basically we had zero interest rate. And so there was a bunch of cheap money that was passed around and the stock market went up because money was cheap. Borrowing didn't cost anything. You had people getting under 3% for home loans. Home prices got, really high. And the same thing happens with stocks, because most of all the money that buys stocks is all borrowed. In fact, technically, all of it is, when you look at the system at its core. So when money is cheap to borrow, assets go up because everybody's buying them because money is cheap to borrow. So if that's the case, when you hike, and this is the key point here that people need to get, when you hike the interest rate, the debt that you're holding becomes harder to sell because the new debt that gets issued is more valuable. When you hike the interest rate and the new debt comes out, that debt becomes more desirable. So all of those notes that you're holding at basically 0 or very, very low percent, virtually 0%, those become worth a fraction of what they used to be. And all of the collateral that is backing the loans that has allowed you to own your assets, that collateral gets decimated, right? So it's like, for example, you own a house and you put down 100,000 and you borrowed 400,000. You live in Mississippi or something. And basically, because homes everywhere else, at least that I know, like, are 7 figures. So the collateral that you used on that to get that $400,000, a lot of times there's just going to be income and stuff. But let's pretend you had to, I don't know, use debt. Let's just say you had some bonds that you posted as collateral for that loan. And the minimum amount of collateral for that loan was another 100,000. So you put $100,000 down, you have $100,000 in collateral, and then, they lend you 400,000. Well, all of a sudden, if the bonds that are that bit of collateral, if their value get cut by even 30%, you're probably going to get a margin call because you don't have enough collateral to keep that loan alive.
Bingo. That's why when the markets were sleeping here on Sunday night, which was Monday morning in Japan and Asia, you saw what's the only ATM window open at that time? Bitcoin. And that's why the Bitcoin price took a shit, because it's like everybody was cashing out. It's a sell-off.
Yeah, that's their assets are, and that's why back in, I can't remember if it was this year or last year, when I can look in the chart because it's on the USD/JPY chart. Let me back out to the weekly. I think it was 2024 now. Whoa, I'm really back down. I'm on the monthly here. Give me a second. This is the weekly. In August of one of those years, see, July, August, it was 2024. You saw a massive move here where the Japanese yen was protected, right? They started hiking the rates, and they did it once, like in a month or two before. I think it was like June they did it, nothing happened. But then they did it again in August, signaling that they're going to start protecting their currency. And what happened to the NASDAQ at that time? You had a nasty move down. This was July of 24, August of 24, right? So that was it actually happened in July. So there you go. This was the stock market. Just because the Japanese decided to cut their rate once, actually twice, the stock market crashed 17%. I mean, that's billions, if not trillions of dollars.
Trillions.
Yeah. So, you have to understand it. And evidently, and this I did not understand until V explained it today, if the US were to cut rates while the Japanese were hiking rates, then you were going to have that same problem again. Is that what you're saying?
Exactly correct. We're going to have the same problem.
And it's a sell-off
because right now, exactly, because now it's a sell-off, and because when Japan had that zero rate policy, it's just like, and they were going into, like, in some aspects, almost negative interest rates. Every time the U.S. institutions would borrow yen at zero, the cost of their debt just became lower and lower. It was an infinite money glitch, as people would say, right? And so they were very happy to do so. Now with them raising the rates, all of a sudden it's just like they're caught between the rock and the hard spot. It's like, it used to be a thing. It's like a suicide bet is betting against the Bank of Japan that they're going to raise the rates. That's how it's always been forever. And that's a common theme. You talk to anybody in finance, they'll tell you, yeah, betting against the BOJ that they're going to raise rates is stupid. They're not going to raise rates. Well, now they are. because the whole world's changed. The system is breaking. And now it's like the cost to carry is extremely expensive. And these guys are leveraged. You got to understand how leveraged these guys are. They're leveraged, 10, 20, 30, 40x.
Yeah, to the
margin calls are coming. Margin calls happened, and that's why you saw the dumping of the market that we've witnessed the last several weeks. And margin calls will continue to occur. And there are some, from what I'm hearing, lots of big whales that are trapped. They are trapped. There's no way for them to swim out to shore. There's no way for them to swim to liquidity. It's a big problem, guys. You got some beached whales. These whales are about to get beached. They're about to get slaughtered.
Well, I'll tell you what. The question would be, is it going to happen no matter what? Or if the U.S. were to hold rates steady, how long would it take for this unwind to complete to minimize the carnage? Right.
That's the problem. Because the way Western finance worked for the last several decades, there's so, like, our markets, we always talk about there's no more mark to market. There's no underlying value of the asset anymore. There's no real price discovery anymore. And that's the foundation on which all of our equity trades are built on. Like, no one knows. Like, really? You think really? I mean, seriously, guys, you think Nvidia's worth $5 trillion? No, it's not. It's all hoopla, right? So when you have a system like that and you don't know what the underlying asset is, all you have is just the best guesses. So we're kind of caught between the rock and the hard place. And to be honest with you, I don't know what they're going to do to get out of it. I'm not sure. I know right now the Fed is on the phone with the BOJ, and they're trying to figure it out. But this is the $100 trillion question. This could be the fuse that if we're seeing it play out live, and I think I don't know how they're going to get out. I think there's going to be another sell-off coming. This is why we're seeing in the data points Bitcoin at 26,000. We're seeing look, the guys. There's a reason why Berkshire Hathaway, Warren Buffett, sitting on close to $400 billion in cash. He's not doing shit with it. Why? Why is he sitting on $400 billion almost in cash, and he's not doing anything with it? Because he knows there's a coming crash. He knows there's going to be a massive sell-off coming. Him and a few others are going to be the ones with the capital to buy. That's what he's waiting for, right? This guy's been out for like months. I think since April or May he was out. $400 billion cash just sitting there. He knows what's coming.
Yeah, I believe it. Well, yeah, Warren Buffett, a lot of people think of him of this nice old guy who, drives his Oldsmobile and, probably has ice cream. Koob in the private chat says that Buffett bought a bunch of Google.
Still sitting on fucking $400 billion in cash. Doesn't matter what he buys, a little bit here, a little bit there. It's nothing. He's still sitting on a massive amount of cash. No one sits on that kind of cash. Let me tell you how this game is played.
You're losing money if you sit on cash. If
you're parked in cash, it's dead money. I don't know anybody that's parking in cash. Everybody's capital is deployed, right? So it's not just him. There's several others that are doing the same thing. This also correlates to the wood chipper that MicroStrategy is going to be slammed into, and they're holding a shit ton of Bitcoin. Their whole entire business model is that, right? So when you start connecting the dots, you start pulling out and start making those connections. Hey, this connects to this connects to that, this connects to that asset class, this connects to this crypto, this, that, and the other. You see a very interlinked web that's all daisy chained together. And that's a big problem. So I don't know what the answer is, honestly, man. This is like, it's way above my head at this point. Like, I have no idea how they're going to do this.
If nobody has any idea, I think you're talking about something that would have to be cooperation. This is a world finance problem.
It is.
Yeah, this is a systemic issue. So
huge.
There'd have to be agreements made.
There has to be something. Someone's got to do something. And what's the VIX at right now? Do you know?
What's the what?
The VIX. What's it sitting at?
I could take a look. Let's see. Let me roll down to a lower time frame. VIX is volatility for the SP 500. For those of you who
17, right?
This is 1733. Yeah. It's actually pretty low compared to compared to other times. It's rather low. Let me
pull back out. You see the pattern.
Let's do this.
We're due for another. There it is.
Yeah. So you're looking at the VIX bottomed out.
Yep.
On the 5th. So VIX is volatility. So volatility, the VIX will often spike when the SP 500 is going to fall. So let's take a look at the ES1 really quick. We'll overlay on top so people understand what the VIX is. You'll notice that the VIX starts to head up as the S&P is falling, right? That's how that works. So it's a pretty decent correlation. A lot of people use the VIX that way. Now the VIX is not necessarily like something you can use algos to chart, right? And just because it's low doesn't mean it's going to like go all the way up really high either. So understand that it like from let's say June all the way through October, the VIX is really low, but it would spike, but it would stay pretty low. You get these little dumps, but as the VIX is falling, that tends to be where the market, like the SP 500, starts to run up as the VIX is falling. And as the VIX is rising, it tends to rise in response to the SP 500 falling. So, it's a lot of people like to use it as a leading indicator of the market falling. And it's usable that way, kind of. It's not as clean as you would think, but it did bottom out really low. It hit a a 2-month low basically on December 8th, so Monday. And it's now up a fair amount from there. So that, sure, it's trending up and you see the market's falling. So, people like to use the VIX. People play the VIX. They actually will, they buy like call options on the VIX and they think the market's going to fall. It's a way to hedge. So anyway, I kept this live because a lot of people don't know what the carry trade is. So, is there anything else you want to say on that?
No, consider this a free drip.
Yeah, it's well, we're still live like on the YouTube. So
yeah,
we kept that. Yeah, free drip to the YouTube. And we talked about this in 2023 with Algo Factory. So, we talked about this with Rogue, but this is a good education for people who may have forgotten how it works in the last time we explained it. So, but yeah, I think V, you talked about it 2 months before it happened in 2024 with Algo Factory.
Yes.
So it's not news to us at Algo Factory, but that's where we're going to go. So V, sir, can you get us out of here?
Guys, don't sit on the sidelines wondering if this is for you. Don't think about you trying this out. You go try Rocky Road ice cream. You do Algo Factory. You want to learn to trade like a hedge fund pro. You want to have the best intel in the damn world. Then you join us here, where you not only understand the geopolitical, geostrategic, but the geoeconomic, all of which affects trades day in and day out. Today was a little sampling of that. Join us or die.
Join us or die.
Just kidding. You're not